Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Mako Mining. Mako Mining is traded on the TSX.V under the ticker MKO and on the OTCQX under the ticker MAKOF. And I'm joined today with the president and CEO of Mako Mining, Akiba Leisman. And Akiba, it's great to get you on the show here. The last day of the year, you put out some news, December 31st, that you're making an acquisition to acquire the Moss Mine in Arizona. Now, this is a mine that was previously in Elevation Gold. People may remember that company. They ran into some challenges. You've picked this up at an amazing deal here for the company, and it looks like out of bankruptcy. And it was an interesting series of events to make this acquisition where your key partner, Wexford, had set up a company that made the acquisition. Maybe walk us through the details of how this deal came together, why the move into Arizona, and what you see as the main value drivers for bringing the Moss Mine into the fold.
Sure, and thanks for having me on, Shad, at the last day of the year. By the way, it wasn't actually intentional for us to announce this deal on the last day of the year. The U.S. Bankruptcy Court, which I'll go over in a second, actually gave their final vesting order yesterday late afternoon, about 15 minutes after the wired deadline expired. So we actually had to put this out in the morning. So a couple of points to the to your series of questions over here. So we had a file on Moss really going back even before Mako was created. I think the first time that we were over at site when this was owned by a company called Golden Vertex, when they first started to build what was effectively a pilot plant on exclusively private and patented land in northwest Arizona. I guess it's going back to 2012 or 2013, maybe having the years one or 2 years off, but it's now over a decade. So this was always kind of an asset that was certainly in our bailiwick and one that we were focused on even through the predecessors over at Mako. The problem is that Elevation and its predecessor Northern Vertex wound up encumbering the asset, having some operational difficulties, undercapitalizing it, kind of having these very strange mining contracts, which effectively blew out their operating costs. They really weren't as efficient as they could be. They were taking pretty high cost loans to keep the lights on from some of their royalty and stream providers. And it was very clear, really starting about 2 years ago, that the company was insolvent. So we did pick up some conversations with them when they engaged a couple of brokerage firms going as far back, I guess about 2 years ago. And those conversations went nowhere because most people that would actually look at the Elevation balance sheet would kind of come to the conclusion that this was not going to be a viable entity. But it was certainly in the back of our mind that if it hit the inevitable bankruptcy process, is that we were going to be interested in it. So they hired a new advisor. They declared CCAA bankruptcy in Canada because this is a U.S. operation. There was also a filing under the U.S. bankruptcy code under Chapter 15, which is effectively a mechanism for international bankruptcies to have recognition between sides of the border. So it's especially effective when you're dealing with a jurisdiction like Canada and the United States over there. So you had to deal with the Canadian courts, which approved the deal maybe 2.5 weeks ago, and then finally on the U.S. side of things. Now, we'll talk a little bit about the financial structuring over here, and then we'll talk about a little bit on the operational side of things. So when people have this image of Elevation and Moss, for that matter, they really think about this in terms of a company that just had an overly levered balance sheet, number one, right? So here's a company that was carrying in excess of $70 million of liabilities on the balance sheet. Almost all of them go away. For your viewers who aren't familiar with bankruptcy processes, there's an established procedure called a reverse vesting order, where you can wind up acquiring an operating subsidiary. So not the assets, you're actually buying the shares of the operating subsidiary. And then you have a mechanism in place to basically send the liabilities to effectively a shitco, right? So normally you set up a special purpose vehicle to do that, and then that kind of like goes away as part of the bankruptcy process. Here it was like a modified reverse vesting situation where Elevation, the parent company, actually wound up being that, for lack of a better word, shitco throughout this operation. So all those liabilities are gone. with the exception of some liabilities associated with environmental. So, for instance, there's $15 million of reclamation requirements over here that is bonded by a third party insurer. But if you think about what we've removed, there was a life of mine silver stream on 100% of their silver production, which had a run rate of about 200,000 ounces a year of silver. But the reality is that this was a mine that was probably only running at about 80% of capacity. So the reality is you're probably looking at something that was closer to 250, maybe even pushing with enhanced recoveries up to 300,000 ounces a year of silver. I mean, you're effectively taking something that was going to be like $8-9 million of cost just off the top on an annualized run rate. We've basically eliminated almost all of the executives and a lot of the senior people over the operation. So the mine site G&A has also been reduced a further $2 or $3 million a year. So before we even stepped foot, like again, this deal closed this morning, right? So our guys were actually only able to go to site under full control of this at 11 in the morning Eastern time today. We did a little bit of diligence during the bankruptcy process where we made a few site visits during that time. But really today was the first time that we've had that access to the ground over here. Before we did anything, we removed about $10 million a year of actual cost structure from the old Moss mine. So whatever image that people have about Moss in 2020, early 2024, 2023, when it effectively went into its final death throes, all of that has to go away because it's a completely restructured asset. And then when you're actually looking at the ground, there's a lot of things that they did that were just operating this thing inefficiently. Like, for instance, there's a crusher which has a like right at the front end of the crusher, it was just undersized, right? So they were operating this thing at I don't know, 8,000 tons a day, where there's really no reason why the plant that was designed can't be running at 11 or 12,000 tons a day when it's fully debottlenecked. We're not talking about large capital items over here. So we're looking at this asset. We're getting in at an extremely attractive price. I didn't actually discuss what the purchase price over here was, right? So we're effectively buying this thing for $4.9 million US, number one. And then once Mako acquires it, the assurity provider, so the insurance company that underwrites the reclamation bonds, those $15 million of reclamation bonds, there currently is about $3 million of cash and letters of credit that are collateralized against that $15 million. So effectively, they have a bond outstanding for about 12 of that 15 net of collateral. They've agreed to release half of that collateral at the time of acquisition. So the effective purchase price for Mako is only about $3.4 million when all is said and done. And again, that's after over $60 million of liabilities have been removed from the effective balance sheet of the parent and the operating company. And about US $10 million of operating cost basis has been completely eliminated from the company.
Well, Akiba, I want to get into the silver stream that was on the Moss mine that has now been retired after EGA, the Wexford holding company, was able to acquire Golden Vertex Corp. And so it looks like that's been wiped out. But then also, could you speak to the other two royalties? It looks like there's a 3% and a 1% royalty still in place. Could you break down who owns those, what the timeline is to find out whether those will still be on the project or not? Give us a little more color around the royalties and the silver stream, please.
So there was a silver stream for the life of mine silver coming out of Moss. And again, at a good run rate, that's probably pushing close to 300,000 ounces a year of silver. So it's a big number. And then there was also 5 other royalties on the property. One of them was on a piece of land that was effectively depleted. So we actually left that in the bankruptcy. One was settled away, so that's completely gone. There's one associated with an earn-in agreement that hasn't been complete yet. That's actually a key earn-in. So we kept that as part of the bankruptcy process. So that's still an asset of Golden Vertex, the operating subsidiary that's being acquired by the Wexford vehicle that eventually will be acquired by Mako in February. And then there were 2 remaining royalty interests, one owed to actually 2 public companies, one notionally public called Patriot Gold. They're owed 3% on a royalty. That encumbers a good portion, effectively most of the mine. And then an affiliate of Sandstorm, another mid-tier royalty company that has a 1% royalty package. The bankruptcy provision in the vesting order that was issued last night wound up punting the determination about whether those royalties are real property interests or unsecured contractual rights to a later date. So what we did is we have a structure in place where we allowed ourselves to close the bankruptcy, number one. And if it is determined that those royalties are real property interests, great. No harm, no foul. We'll keep that the effective 4% royalty, so 3% to Patriot and 1% to Sandstorm. If it is determined that they are unsecured contractual liabilities, which we anticipate happening over the course of the next 6 months, those royalties will go away. So we'll further reduce the cost structure of the Moss mine, and then in turn, Mako will effectively pay another US $1.5 million to the creditors. I don't anticipate that happening for another 4 months at a minimum, but it should happen in the first half of 2025. So you can see that's a long-winded way of saying is that we acquired this producing mine. There was actually a gold shipment that went out on Sunday, where we're having this conversation on Tuesday, so it's still producing a residual amount of gold. Mining operations were temporarily suspended at the beginning of the bankruptcy process. But once we finish some very minor debottlenecking items at the plant and we optimize the mine plan with a new mining contractor that will be operating under Mako's quality control as opposed to Elevation's, we'll start mining operations probably over the course of the next few months. So we anticipate this being back up and running in an effective commercial capacity sometime in the latter half of Q2 of this year. So if you think about what I said, we're effectively buying this thing for 3.4 million. So the 4.9 million less the $1.5 million that's going to be rebated by the insurance company. There's $60 million of liabilities that are going away. There's a minimum of $10 million of cost structure that's going to be eliminated from the Moss mine, and we think that number is going to go substantially higher. There's potential to remove it further to royalties up to 4% of revenue coming from the property. And we're doing this with a producing mine in the United States of America, where there's prospectivity across this district in terms of lands that Golden Vertex currently owns, and we can also look at the district on a more holistic basis as well. I have never seen in my career a acquisition that, if it works, there's still a lot of work to be done, but if it works as designed, I've never seen an acquisition this accretive before in my, 18 years in the industry.
All right, Akiba, I do want to circle back to how the deal was actually structured and came together, where your key strategic shareholder, Wexford Capital, actually created another company, EGA. It's actually EG Acquisition LLC, but EGA is actually the company that's acquiring Golden Vertex Corp, and then Mako is going to make the acquisition by buying this asset from EG Acquisition. So could you explain the thinking behind this kind of a transaction? Why did it happen where Wexford set up a company, EGA, to make the acquisition, and then you're buying it from Wexford?
Yeah, sure. So with respect to EGA, there's a reason why there's this fairly convoluted transaction. There's actually like a few reasons why. So think about when Elevation was in their final throes, and that was kind of in the June timeframe. So the end of Q2, early Q3. And then they finally declared CCAA with the Chapter 15 in the US bankruptcy process at the end of July. Mako was coming off a pretty tough quarter over Q3. We were constrained, as some of your viewers know, at our Q3. The beginning of Q3 was when we received our full EIA over the Las Conchitas area, where we were constrained in terms of where we were mining in Q2, and then really most of Q3 we were just catching up on pre-strip. So Q3 was a weak quarter for us. I mean, we effectively only sold about 6,000 ounces of gold. We only got to the good stuff in the last few months of the quarter. And while this bankruptcy process was going on, we ended Q3 with only $5 million of cash on the balance sheet, right? So while we were expecting to have a good Q4, even going back as far as early Q3, Q2, once we got that permit, you still don't feel really comfortable until you can smell the cash, like actually see the cash on your balance sheet. So if we were sitting at the end of Q3 with $5 million of cash and we were staring down a bankruptcy proposal to spend $4.9 million on an acquisition, well, there's obviously an element of risk that comes from it. Now, it turns out we had an absolute blowout Q4. It was a record for revenue. Our cash balance, as I put in the press release, is now over 13 million. So we've increased our cash balance by 8 million bucks just for the quarter. Cash and receivables on a net basis between Q4 and Q3 was over 6 million. And so we have a lot of room to complete this acquisition, but looking back in history, it was prudent to do this. Secondly, there are tactical reasons why it was helpful to use an anonymous company to do this. So EGA, in fact, like when Wexford created that vehicle, actually, I'm like embarrassed to admit, I actually didn't realize what EGA stood for. I knew what the A stood for acquisitions. I was like thinking, who do I work with at Wexford that has like the initials EG? I really don't. And then it hit me like 2 days. It's Elevation Gold. So they established this special purpose vehicle for the sole reason to, alongside Mako, go and acquire this asset through the bankruptcy process. And it's actually good to do this because if a very well-capitalized investor is coming down the bankruptcy court in a competitive auction, people can smell money, and usually the price winds up getting higher that way. Likewise, if an operating company like Mako is coming down the bankruptcy, especially when a lot of our competitors were involved in an adversarial situation, we disclosed Patriot and Sandstorm, but there are actually other companies that Mako comes across every now and then that it was probably good to keep Mako's name out of it for a period of time for tactical reasons, along with for monetary reasons. And then finally, the vesting order was complete yesterday. And then even though the wire deadline was technically missed by a few minutes, and then we closed the deal at 11 o'clock in the morning immediately. So actually at 7 o'clock in the morning, Mako basically puts out a press release saying that they're going to be acquiring from Wexford this vehicle that they set up for the sole purpose of acquiring the operating subsidiary that owns the Moss Mine, Golden Vertex, and Mako is going to be buying it for cost. So that $4.9 million, it's very simple. It was the baseline price for the deal was $4.65 million. There was $100,000 of post-closing settlements that mostly dealt with prepaid insurance line items that basically made the effective price $4.75 million. And there was $150,000 in legal fees that Wexford had to spend. And then Mako is going to give them a price to make sure that Wexford's not out of pocket for those legal fees. So all of those add up to 4.9. Mako's buying it for 4.9. It's effectively and approximately the cost basis for what Wexford acquired this through the bankruptcy process. So I heard some criticism on the Twitter sphere. It's like, oh my God, those Mako guys and those Wexford guys. It's like everything's a shell game with them, and they do this and that and whatnot. It's like it's kind of like silly when you think about it. Is that the only reason why this happened is that we actually have some internal expertise over at Mako on the operational side, over at Wexford on the bankruptcy and distress debt side of things. So we actually have an organization that's capable of delivering things where I don't think there's like a single mining company of our size that's set up to be able to deliver competitive processes like this, which is effectively a pretty complicated bankruptcy when you think about it for the size that we were talking about over here. This was a perfect example of when the Mako platform is effectively running on all cylinders. And that's our financial expertise. It's our ability to fund these things through profitable operations, our ability to go and review technical diligence with the team that we've put together, and most importantly, the ability to insert our operating team, which, oh, by the way, is headquartered in Arizona, in Tucson. It's a good solid 5 hours from the mine site, which is actually closer to Las Vegas than Tucson. But still, we have an established operation in Arizona. There's going to be virtually no additional senior executives that we need to employ in this operation to get it to run, not even at the level that Elevation was running it, but to get it at the optimized rate. It is going to be a completely different operation by putting it into the platform that Mako has versus what they were doing before. And that's not just from removing the liabilities and debottlenecking and doing all the things. It's just having that infrastructure in place that can be inserted into these things. It's going to make this operation look completely different than what it was looking like even as late as 4 months ago.
Well, Akiba, let's dig in a little bit more to what you can anticipate with Moss as you do move it into production over the next couple months. I mean, I know the mine is already still producing, but as you mentioned, you've removed $60 million in liabilities. You've trimmed the silver stream off the top of it, which saves another, you say, 9 to 10 million. So a lot of efficiencies there. But I know you can't actually do guidance or anything like that because literally this deal has just happened today, but can you give people listening a rough idea of what you could expect from production out of the Moss Mine, how this will complement the production profile out of Nicaragua? How will this start impacting things in 2025 as we move quarter to quarter?
Yeah, sure. So we put some historical data in the press release. So it was actually copied straight from Elevation's financial disclosures over the last 5 years in terms of what they were doing. And basically, what this mine was doing was you're effectively like a mid 0.4 gram a ton heap leach operation. Let's call it 1.5, 1.75 to 1 strip ratio, which is actually not that low of a grade mine. There are some particular complexities with the ore body, very hard rock. So it's always going to be on the high end of mining costs here on a unit basis. So those are things that we need to deal with. But at that level, they were running this at a mid 30,000 ounce a year producer, low to mid 30,000 ounce a year producer. We have some of the most disciplined grade control processes and procedures for open pit mining in the industry. So we anticipate that grade going up somewhat. It's not going to be like 2x, but certainly there's going to be room for improvement at the margins on the grade. So I do think it's reasonable to expect that mid 0.4 is probably going to look like a 0.5 type operation when we get our hands on it. And then probably most importantly, and anybody that goes and visits the mine, and I think Elevation would admit this themselves, is that there are very, very easy to fix debottlenecking exercises over at their plant, where if you see on some of those production data points that I was giving, is that this was really only averaging about 8,500 tons a day in aggregate. There is no mechanical reason, and frankly, there's no ore access reason why this shouldn't be running at a 10 to 12,000 ton a day clip with very, very minor adjustments to the front end of the plant. So when you start adding up everything, and again, without actually giving like formal guidance, this is really giving guidance to people to get out their calculator, is that with all the things that I'm saying, is that it does not take a yeoman's effort to turn this mid 30,000 ounce a year producer into a 40,000 plus ounce producer with very, very minor adjustments. And if I didn't hit this home in the press release or in this conversation, this is a producing mine. So while mining operations have shut down, they still produce gold. The delivery went out on Sunday. One of the interesting factoids that I like about this bankruptcy to show this to people is that Wexford actually offered some debtor in possession finance during this process as well. It turns out that they didn't need it, right? They actually had more cash at the end of the bankruptcy process than they did at the beginning, which is unheard of, like for like normal high capital intensity operation. It's because there was actually like a reasonable amount of gold production that was funding their operations for the course of the last 4 months. So it should be an interesting tidbit that all the operating permits are there, the ability to turn on the optimized mine, that make these adjustments. It's not going to take more than a few months to get done. And we fully anticipate being in commercial production sometime in Q2 of 2025. So think about what we've done, right? So we've acquired an asset where albeit in an idealized format, so don't take this as guidance, but you're effectively doing something that will double our production, right? And you're funding it out of 5 weeks of our Q4 cash flow. Think about that, right? So everybody's like worried. I spoke a lot about M&A, and everybody was like so afraid that we were gonna like. I told everybody we only do accretive M&A, so we don't do dilutive M&A, even if there's like some sort of strategic rationale to do it. We don't do it. It's not in our DNA. Everybody was worried about us issuing equity to go and acquire this thing, and lo and behold, we acquired an operating mine funded out of 5 weeks of cash flow. It's extraordinary what we pulled off. And it's a testament to the team at the operational level, at the geological level, the oversight level, due diligence level, the board level, the Wexford level, everything. Every single cylinder of Mako was operating on this. And I think we pulled off a coup.
Well, Akiba, it's an amazing transaction, and the more you break it down, you can really see the strengths of the team, the knowledge base. And I agree with you. I don't think most companies at the same market cap would have the capabilities to pull off a deal this complex and so accretive for shareholders. But let's put it in the vantage point of the larger company vision. You also made an acquisition earlier this year of the Eagle Mountain project in Guyana by acquiring Gold Source Mines. And so some people may be wondering, how does this new acquisition of the Moss Mine in Arizona maybe complicate things, or has it changed the timeline of the development of the Eagle Mountain project? Is it complementary in the sense that this mine is already producing in Arizona, and so there's not as much CapEx needed to go into it? Is there any other CapEx you got to put into it? Could you walk us through how this affects the overall company with all three projects now, Nicaragua, Guyana, and Arizona?
Yeah, to the last point about capital needs within Arizona, it's limited, right? So to get this up to commercial there's going to be like years down the road, there's probably going to be some things that we're going to need, obviously, like leach pad expansions and plant optimizations, things like that. To get this up and running to the levels that I was kind of intimating is going to take very de minimis amounts of CapEx. So there are a few things that probably need to be cleaned up, but we're talking about things that easily can be funded through our current cash balance of 13 million, but funded out of just free cash flow from our ongoing operations in Nicaragua. So getting Arizona to commercial production is not going to require external financing. Now, that being said, Eagle Mountain put out so we're at the last day of the year in 2024, and one of the first days of the year in 2024, the predecessor company, Gold Source, put out their PEA for Eagle Mountain, which showed an upfront CapEx of $96 million, which included a pretty substantial contingency associated with that as well as part of that number. That was always a number higher than what the cash generative capabilities of San Albino were, right? So there was always going to be like an external financing need. Hopefully everything's going to work out at the restart of the mining operations, even though it's still producing over at the Moss mine, but certainly going to help from a cash flow perspective to help fund it. And then more importantly, the constraints that Mako is operating is that we have a very profitable mine, but it's in Nicaragua. It's very difficult to be able to access capital, whether it's equity or debt, on the back of an asset that's operating in Nicaragua. I could say with certainty, having an operating mine in the United States makes our ability to capitalize things, whether it's through equity or debt or through whatever, it will wind up helping the probability that Eagle Mountain gets the financing it needs, which is really the main constraint of turning that into a cash generative asset. Because at the end of the day, like the Guinea's government wants assets like this into production. So from a permitting perspective, we're moving gangbusters on this. Nothing's going to be delayed with that. We're finishing off our hydrological and geotechnical work over at site. Some of the results of that will come out in January. But at the same time is that I really couldn't speak to where a substantial portion of that upfront capital number was going to be coming from. Now, you know what? I actually have a lot more options in terms of our ability to fund it. So in terms of like schedule and timelines and probability of getting things up and running, this deal winds up enhancing Eagle Mountain's chances of getting up and running in the timeframes that we were communicating before, as opposed to detracting from it or delaying it. So we're in a much better situation today on the advancement of Eagle Mountain because of what we did in Arizona than we were yesterday before this was communicated to the market.
All right. And then final point here to wrap up with is that you've shown this year that Mako Mining isn't just a producing company, but also a great acquisition company. You've made two acquisitions in 2024. As you look out to 2025 and beyond, do you think you'll continue to have this roll-up strategy of looking for accretive transactions? Will you basically just focus more on the operations you have? How should people think about Mako Mining as we move into 2025, Akiba?
We're just getting started. Now, that being said, like we don't really have like preconceived notions of how big we need to get, or like an urgency of like sometimes when you deal with roll-up strategies, like the roll-up strategies become the strategy of the business in and of itself, right? We don't do that. That being said, we're now in 3 jurisdictions. I mean, we were in the United States before from an operational headquarters perspective, but we now have 3 operations in 3 jurisdictions. And it puts us in an envious position to go and expand, both in terms of what we have on our land packages through exploration, tuck-in acquisitions along the side. And we certainly have the capacity to do more to bring in even different jurisdictions. So we are looking at that. So I would look at Mako certainly as a platform. I think this is a great transaction to kind of show your listeners exactly what we're capable of by using all the tools that are available to us in our toolkit. But we're not in the business to acquire things for acquisition's sake. Like we tend to be pretty sharp when it comes to financial deal metrics and the ability to execute them on the operational side, which I think puts us into a category of companies that is pretty deficient in our market cap basis and probably even at the industry as a whole.
All right, well, we'll wrap it up there for today. We had a great big picture vision of how Mako Mining has become that platform for growth, not just through production growth, but through acquisition growth and the ability to structure financially accretive deals and the way to bring assets into the mix and diversify your jurisdiction. And as you mentioned, even improve the ability to raise capital, bringing in the US based operations. So a lot to make a note of here on the last day of the year, the last M&A deal of 2024.
Yeah, we can definitely say that. Like, if anybody actually announces anything in the next 6 hours, I'd be impressed. So we can definitely put a pin. Mako announced the last M&A deal of 2024. Exactly.
Yeah, I think it's something worth celebrating. It was fun to do this today on the last day of the year, Akiba. And I'm sure we'll be talking again as we roll into 2025 to review how Q4 production went in Nicaragua. But now we got a lot more to pay attention to as a company as you've continued to add assets into the mix. As always, if people want to follow along with the news flow from Mako Mining, definitely click on the link below this interview. It takes you right over to the Mako website, straight to their news section where you can sign up for updates or just follow along with the news as it hits the wires. Akiba, keep us posted in 2025. We'll get you back on for an update. And as always, looking forward to our next conversation.
All right, great. All right, thanks, Chad. Happy New Year.